Hey guys, welcome back to the Syndicate. Today we got the guy with the shortest name in venture, Rob Go, on the program. Thanks for coming today, Rob.
Hey, thanks for having me. Appreciate it.
So I've learned I'm terrible at introductions, and I want to ask you about yours. But first, tell me about the background.
Oh yeah, I'm glad you asked. It's just a sticker. So it's fun, cheap, and easy to apply. I actually used to have a Space Invaders one in my old office, but I don't know. Donkey Kong's a little bit more interesting, a little more heroic. So that's what we're going with right now.
Most VCs aren't that cool. I like it.
I appreciate that. I wouldn't say I'm very cool, but I appreciate that you like the sticker.
That's okay. The not cool kids are cool now, apparently. So tell me a little
Yeah,
bit
I
more
know.
about you.
How far back do you want me to go?
I don't know. I
Um,
was I was checking you out, and you have quite the background. So you're running NextView now. You've had some huge portfolio companies. 50. By the way,
yeah.
50% of your portfolio companies have had exits.
No, I don't think we said that, did we?
I've just looked through your angel list page, and it was like 7 out of 14 or some
Oh,
crazy
that's a
number.
lot. Well,
It was
well, I
very
think it's
impressive.
well, AngelList is not a I think must not be a complete set. So I'll try to go quick. So I actually grew up overseas. I was born in the Philippines and lived there and in Hong Kong for my childhood. My dad was an entrepreneur. He'd started a number of different consumer-facing businesses, actually, and so I'd kind of been around the entrepreneurial spirit growing up. These weren't tech companies, but they were different variations of sort of retail, restaurant concepts, indoor entertainment concepts, that sort of thing. So that was sort of just like a part of my childhood. I ended up getting into tech by joining eBay, like 14, 15 years ago at this point, in a product role. So it was a very fortunate time to be there. It
Pre-IPO?
was a time, no, it was after the company went public already. So it was an interesting moment where like the internet bubble had burst. A lot of people were wondering whether like this internet thing was going to be a thing anymore, and there were only a few companies that had very robust business models and ended up sucking in like tons and tons of really great people. And so I was fortunate to be part of the company during this really special time for the business when they aggregated just an enormous number of really great people, and the company was going from strength to strength. I ultimately came back out here to the East Coast because I love it here in Boston. My wife's originally from here. We really like this area, and went to business school in Boston. Did some work for some startups, but then met the team at Spark Capital and ended up joining them. So that was really my first foray into the venture capital industry. Just as they were raising their second fund. So I was there at Spark for a number of years. And then in 2010, there was this pretty obvious opportunity around focusing on true seed stage investing as the best funds had gotten really big and there was a gap in the market. And so I teamed up with two of my other partners, David and Lee, and we co-founded NextView around that time. And so fast forward to today, we've raised three funds. We've invested in over 60 companies. Our strategy is to be a national seed-focused fund. We have a high conviction, hands-on strategy, which means that we don't do that many deals. We try to lead or co-lead most of our investments and be really actively engaged with the companies at the earliest stages. We recently have shifted into a more thematic view of the world in our investing, and so we're focusing on what we call the everyday economy. And the idea here is to invest in companies that are either ubiquitous in that they're mass market opportunities that tons of people, everyday people are facing, or they're habitual. So the types of products and services that you're interacting with every single day, and these tend to fall into a number of the largest areas of consumer spending, like housing, food, transportation, and so forth. But it's not exclusively in those categories. We tend to think mostly about this idea of being ubiquitous or habitual. So hopefully that's a helpful overview of the
No,
last
that's great. It brings up
many
a ton.
years.
It brings up a ton of questions. So, first question: you get the job with Spark. What does that look like? A lot of people are trying to join firms.
Yeah, so it was. I like to say my experience getting my job at Spark was unlike almost anyone's experience
Every VC
because
says that.
every
Every
every VP
VC
says
says
that.
it's a completely random story, and then you
It is
actually.
completely.
Mhm.
Yeah, I'm sure there's a lot of similarities when you look through it. Well, I think what is true is getting a job in VC is about being in the right place at the right time and having the background or skill set that happens to overlap with what the VC is looking for at that moment. So in my case, you got to fast rewind the clock. This is 2006, 2007. So this is like the emergence of Web 2.0, if you'll remember that. I was in the East Coast. There were not a lot of people in the Boston area who'd worked for a, top 5 West Coast internet company. And there weren't a lot of investors in the East Coast who were looking at these types of opportunities, but they were starting to because of this Web 2.0 craze. And so Spark started looking for somebody with that kind of a background, and they actually reached out to me initially by a cold email in December, if you can imagine that. Actually, while I was in my final round interview with, maybe not my final round, second or third round interview with a venture-funded startup about a product role. So I very distinctly remember that. And then, I never really thought that I was going to go into venture, but once that door was cracked open, started to pursue it. And Spark, the interview process with them actually ended up lasting probably 5 or 6 months after that. So it was a very lengthy process, but ultimately ended up joining them.
And then you fast forward, things are going well, and you decide to raise your own fund. How do you come up with a thesis?
That's a good question. At the time, the thesis was I guess in retrospect, it's kind of straightforward because it was a market gap kind of thesis, right? So, and you also already had a couple funds on the West Coast that had started and were showing success around that model. So this is around the sort of micro VC, seed stage VC model. And even though we were relatively early to the game, when we started, Steve Anderson already had Baseline, Clavier was doing Soft Tech, Michael Deering had Harrison Metal, Mike Maples was doing Floodgate, and First Round Capital had been around for a while as well. And so there were a couple of these funds that were showing that founders raising their first $1 million or $2 had that there was misaligned incentives with the really, really big funds. You could do great as an investor with a smaller fund focused on that model. And early stage investing is a very hands-on kind of business. And so having somebody in your proximity was really helpful. So the fact that there were very few people on the East Coast that were doing this at the time, I think, the team at Founder Collective were just getting started. They were probably 6 to 12 months ahead of us in terms of starting in the market. And Lear, I think, had a $7 million fund at the time, but I think that was pretty much it out here on the East Coast. So, in retrospect, it was kind of straightforward because there were parallels of the strategy working somewhere else, and there was a clear market gap.
How are you seeing that market change now? So Series A's are getting pushed later. I've also seen some stats showing that seed funding is actually going significantly down, which I was very surprised about.
Totally.
How are you seeing things change out there?
Yeah, so I think those are both true. I think if you rewind the clock to when we started up till today, a couple things happened. One was that a few years ago, there was actually a huge frenzy around seed stage investing because a lot of the groups who started early were having some success, and the barriers to entry are kind of low, right? Like it doesn't take that much money to get going as a seed investor. So I would say there was like this influx of capital, 4 years ago, 5 years ago. And what happened was all of the folks who were investing at that time, their companies started to hit brick walls, right? So either they ran out of money or their winners were doing great, but they found out, wow, it's really hard to get exits in this business, et cetera. And so what you're seeing is a lot of those groups started to pull back in a meaningful way and slow down. So that's part of the slowdown. The second is that later stage investors started to focus on companies with more and more traction. And part of it is self-fulfilling, like because there was so much seed capital out there, it created a lot more companies with funding. And so the Series A and Series B investors could basically wait for stuff to really show extraordinary traction and try to pile in on those. And so the lens for those rounds have changed, which means that, companies, I wrote a blog post about this a few months ago, but, a lot of companies today need to be showing, $1 million a month of e-commerce revenue to raise Series A, or at least hundreds of thousands of dollars of SaaS revenue a month. or some sort of groundbreaking technology or really, really extraordinary world-class team. And so that makes it really, really difficult. So I think what you've seen is that the number of seed deals have gone down. The size of seed rounds have gotten a lot bigger. And so, what some groups have done to insulate themselves from this risk is to try to be a part of seed rounds that are like $3-4 million in size or larger. And often these are companies that have already had some traction, which is kind of weird for a seed fund. So that has happened. What it's done is it's created this huge hole around like companies that are really early stage, right? The stuff that seed investing was designed to address, a couple people starting a company with a concept, pre-product market fit, just getting started. And so you've seen the rise of what are called like pre-seed funds over the last few years. And so they've started to enter the market and do things at the earliest stages with the expectation that at the end of their rounds, the companies aren't going to raise a Series A, but they're going to raise some other sort of intermediate institutional seed round before they get to the next stage. So, one of my partners calls it an atomization of the seed stage where, seed used to mean one thing, now it means a bunch of different things, and there are a bunch of different paths towards success. But that's our observation of what's been happening.
Well, realistically, it's just costs are going down, experience levels are going up, and willingness to participate is going up. So it's going to kind of keep moving. As the best VCs go larger because the management fees are enormous, and more and more money comes in. Do you think they're just going to start calling Series A, Series B, and shift everything, which makes more sense? Or will we kind of get into a silly situation where there's a million seed follow-on bridge rounds until you get to a Series A? Because that's what it looks like is happening, and yet it seems kind of dumb.
Yeah, I think a couple of things are going to happen. I think that you're going to see a few funds that start to fill that gap. So there are funds out there that are, a couple $100 million in size, and they do the more traditional style Series A's. And some of these are groups that were classic seed funds that have scaled upwards, right? And so now, I don't know what they call themselves, but Felicis, right? Like they're a boutique early stage fund. They used to do only seeds, but they lead series. They led one of our Series A's in New York last year. So there are groups like that. There are other groups that have been sort of purpose built from the beginning to be Series A funds, and they've stuck with their strategy. There are other funds like True Ventures that is a multi-$100 million fund. I wouldn't call them a seed fund, but they tend to start at the seed stage with most of their companies and lead a couple rounds of financing before before companies go off and raise outside money from other investors. So I feel like there's a gap that's going to be filled by some other players. I don't think we're going to reclassify everything. I think the other thing you're going to see is that, the groups that are investing in these traction-based companies and leading like 10, 15, $20 million Series A's are going to realize that, the pricing on those rounds become kind of unreasonable relative to the remaining risk because there's still tons of risk. And we'll try to find other places to get return. So they'll either, move earlier again. Like I actually am seeing this trend where, the large Series A, Series B funds, they kind of come in and out of the seed stage. And I feel like we're seeing a trend now where more and more of these funds are starting to dabble in the seed stage again. So to me, that's a signal that they're realizing that, leading the 15 on 40 pre-Series A is not the greatest risk reward, and they need to kind of find other places to diversify their point of entry. But that's my 2 cents. I don't know what's going to really happen. We'll see.
So let's talk about the elephant in the room, ICOs and how they're affecting venture. What are your thoughts, especially considering you guys, the daily economy, you're working with consumer-facing products, and a lot of consumer-facing products could have decentralized applications.
I think it remains to be seen. I mean, I think we're clearly in a moment where there is a bubble that will correct. A lot of the dollars that are flowing into the ICOs are the result of appreciated currencies. And so it's sort of just, people have found money, and so now it's being shifted into these businesses or into these projects. Not all, but there are a number of companies that are raising ICOs, and they're sort of retrofitting that model into their business because there's this perception that capital is available. And I think it's already a lot harder now than it was like a couple months ago, but like that's going to get corrected. So there's a lot of frenzy. There's a lot of like uncertainty here. A lot of people are trying to invest in these companies. They don't really understand like the underlying technologies or the propositions here. So I feel like there's going to be correction. I think on the other end of that, there are going to be a lot of really interesting opportunities. But I feel like the frenzy that we see now is a little bit of a head fake and a distraction. I think that there are going to be some companies that say to themselves, you know what, do I really want to dilute myself with a traditional venture equity round now when I can raise a lot of money in a non-dilutive way right now through an ICO? And I feel like that is just a segment of the market that is sort of like disappearing for early stage investors, but will reappear later. But I feel like there's always like segments of the market that are appearing or disappearing. So we're keeping our eye out for it for sure. But I feel like we're kind of in this untenable time period right this minute. But that's probably going to change.
Definitely. If you look at a J curve, it goes up, it crashes, and then it goes back up. And we're getting to the point of crashing. But it will go back up. It's a very interesting technology.
I totally agree.
So outside of that, talk to me a little bit more about NextView, about the podcast, and about how you guys build out an ecosystem and basis for building up. You guys have a pretty good reputation at this point.
Thank you. I appreciate that. It means a lot to us. When we started as a firm, my partners and I kind of went out to the woods, and we sort of, on the advice of a really good advice of a mentor, we said, let's write out like what are the core principles of this firm, and even if we don't share it with anybody else, like what are the reasons why we started this? Why are we working together uniquely? What are core beliefs that are shared that we think are going to be important parts of the DNA, forever and ever. One of those concepts was this idea of being participants within the entrepreneurial ecosystem, as opposed to just being like a source of capital. So, the mental kind of image that I have at the time was, VCs were sitting in palatial offices in Sand Hill Road or, in Boston Winter Street, waiting for entrepreneurs to like come to their doorstep and like beg for money, right? Like, and our view was that is absolutely not the way it should be, nor will it be that way going forward. What you really want is to have like an ecosystem around innovation in which, everybody is an equal participant and doing their part. And when you think about what a VC has to offer that aside from money, it is this idea of like pattern recognition, the fact that we have a horizontal view of many, many companies and many, many industries. And, there are things that a founder goes through only a handful of times in their career that a VC sees over and over and over and over again. And wouldn't it be great for the ecosystem if some of those lessons learned ends up getting disseminated more broadly? And so that's really the thinking behind why we've been pretty aggressive around getting that information out there through social, through content, our Medium publication, our podcast, some of our ecosystem guides that we've published, and things like that. And so like that's really the source and the heart of why we've done this, and hope to continue doing it.
Where have you seen the most traction and deal flow so far? From your efforts.
Yeah. Sorry, from those efforts. I actually don't think it's. We tend not to think about it that way. The way I tend to talk about the return here is that when we meet a founder that we've never met before, most of them have a huge amount of context on us as a firm and as individuals because they've had a relationship with us over months, if not years, with the stuff that we've put out. And so, that to me is a little bit less around like, oh, we have like all these deals that we otherwise wouldn't have seen, but it's more that like, when we are introduced to a founder that was not in our direct network, we're kind of like on first or second base with them from a relationship standpoint, and it makes it that much easier for us or for them to get comfortable with us as potential partners.
So you've been doing this for a while now. You guys focus primarily on the East Coast?
We have a pretty geographically agnostic view of the world. Probably about 2/3 of our portfolio is on the East Coast because we think it's an underserved market. About a third of the portfolio is on the West Coast, but it is not a strictly sort of geographic strategy.
Talk to me about New York, Boston, and the East Coast in general. We're still looking for a destination to pop down to once immigration finally lets us in the country.
Oh gosh. Well, where have you lived? I forget in the past.
All over the place. I lived in New York for a while, not the city. Georgia, Atlanta. It's not great as a startup hub. I was in Southeast
Hmm.
Asia for a while, Colombia for a while, South America, South Africa,
Hmm.
Europe. Europe's very interesting, but
Yeah.
the states has a lot of good and bad going for it. So it's no need to talk about the politics side of things, but
Yeah, yeah, I know.
yeah.
No kidding, right? Okay, I think they're both great places. I think it's partially a function of sort of, well, the types of things you're interested in and the culture that you want to be a part of, right? So Boston is fairly academic. You have a lot of great stuff coming out of the universities, a huge wealth of deeply technical talent at all levels of seniority. You have a very rich ecosystem around health-related companies. Um, uh, and access to the smartest and most spectacular people in the world. But again, both sort of like the professors and those folks, as well as this river of talent that keeps on refreshing every single year, and that's very very unique. The nice thing though is that people don't think of Boston as a great consumer hub. But there are a couple of like very successful, very interesting companies here. Wayfair has been just an extraordinary business, and they are churning out like thousands and thousands of like really great like people with extraordinary sort of growth, customer acquisition muscle and product muscle for consumer businesses. So I actually think it's more balanced than people give it credit for. New York is extremely dense as a city, and so there's certain types of businesses that like find life in New York because of that density before it moves on to other places. There's a great design aesthetic and sentiment in New York. A lot of people have this hunger. They have this like chip on their shoulder of like, I need to, claw and fight my way to stay on top of the heap, which, leads to very hungry and very driven team members. The knock on New York as a market is that there have not been a lot of like huge, large scale winners. And a number of the companies that have been funded to a lot of hype and enthusiasm have kind of petered out or have gone public and haven't done well in the public markets and so forth, which I think is too bad, because I feel like it kind of like sells the ecosystem short. I think that like the best is really yet to come for that market, even though it's a newer market and has had a little bit of ups and downs.
To be fair, New York's had a lot of bigger wins than Boston, though, right?
Uh, it, I actually don't know if that's actually true.
Really? Who are some of the unicorns out of Boston?
I mean,
Or
Wayfair's an $8 billion company, I believe.
okay,
I don't know if there is a multi-billion-dollar, internet company in New York.
interesting.
More than $5 billion? I don't think so.
Okay, I guess they might be smaller in scale. I bet aggregate they've got them by quite a bit. But
Yeah, that's so. I mean, I think that is true. But when I was saying like the knock on New York is around the like, is there like a really big pillar? And by the way, Wayfair's got a ways to go to being a pillar company in the way that like, obviously like an Amazon is. I think both ecosystems are still searching for that. But Akamai was a really big company in Boston. Like these companies don't come around every day. I actually think that one of the interesting things about New York is like the of velocity of companies that have some level of success, even if they don't like get all the way there, is really really healthy, because you end up having a much broader set of people who've sort of seen the path of like nothing to something to success. Even if the success isn't as huge or as sustained, like that experience is just really, really important for the sort of culture of creativity and invention in those markets.
also for your fund, if you're getting on bats or if you're getting on base versus having strikeouts, your carry goes way up. It's very nice for your returns.
Yes, that's totally right. That's very right as well. I mean, one of the nice things about the seed investing model, even though venture is very much an outlier business, if you're investing at the earliest stages, you can build a very successful fund with outcomes in the couple $100 million, which is life changing money for any founder. or for almost any founder. You're not predicated on finding like a decacorn company to generate a decent return. That's another one of the advantages of the seed models. You have a few different ways to win.
So talk to me about the future of consumer. I see a lot of interesting things happening, but I'm curious to get your take.
Uh, that's a good question. It's a pretty broad question. So, I think that there are a couple different pockets that are really interesting to us, and some that like are really interesting, but we haven't participated in yet in a really big way. So, one area that I think a lot about is consumer packaged goods. So if you think about that industry, it is just like ginormous, right? Procter and Gamble, Kraft, Unilever, those types of businesses are just like extraordinarily huge companies. And then the retailers that support them, the traditional big box retailers, Target, Walmart, the grocery chains and so forth. Like these are just like huge parts of everyday consumer spending, and they're truly mass market opportunities, right? Like every single person buys these types of products, but they have thus far been like not that disrupted by the internet, at least compared to some other categories. So I think that whole ecosystem is really, really interesting, both like selling the products, how these types of products are marketed and advertised, what the channels are, et cetera. I think that's really interesting. So that's one pocket. The second pocket that we think a lot about are experiential categories. So experiential categories. So this has been true for a little while. We blogged about this, so this is a little less new. But it's like, there's a reason why Stitch Fix is one of the few companies to get to be a public company and sort of kind of beat Amazon, or at least have what looks like a sustainable business. And that's because shopping for apparel is a very experiential kind of process, which is very different than shopping for something that is a very distinct kind of SKU. And so those are areas that we think are interesting. I'm very interested in consumer purchases that are ubiquitous but not habitual. So stuff that like everybody deals with, but it's not a very frequent purchase. So Casper is a great example. That's not in our portfolio. We have another portfolio company. We do have a portfolio company called PaintZen or Renoviso, which are both in the home renovation and construction verticals. Most VCs hate these kind of businesses because there's this belief that like they're not recurring. And so how do you really understand these businesses? But then on the flip side, you're like, well, if you're generating, thousands and thousands of dollars of margin with every individual purchase, then maybe it's okay that it's not habitual, because, the economics more than make up for it. And these are categories that are like pretty robust, right? And, similarly, I think about like Home Depot and Lowe's. Those are two of the best performing brick and mortar retailers of the last, 5-6 years. They have not been that disrupted by the internet. And that's because these are the types of products that are very, they have some very different dynamics than what you typically see with Amazon.
And you can try it. You bring something in to see if it'll fit.
Yeah, right. Exactly. Or there's a service level involved, right? Like there's a human intervention that's needed. So that's another area. And then, I think the global opportunity is really, really interesting. We tend to invest in companies that are in the US and US first, but increasingly, I think what we're seeing is that the global consumer is one, there's more disposable income. Two, their behavior is, especially for sort of consumer social products, is a little bit more consistent. And there's just huge markets out there that nobody knows of, right? Like it's astounding to me that musically, which people did hear about in the U.S., was bought for, I forget, $600 or $700 million, maybe more, by a company in China that almost nobody's ever heard of, which itself is not like a monster. It's a monster company, but it's not like Alibaba, Tencent, the things that people have heard of, right? So like, there's just a huge world out there, and I think that was really an interesting watershed moment where you had a Chinese company that people in the U.S. never heard of buying like a big social property that had a huge domestic audience. So I think that's something that we're definitely keeping an eye out for, is the fact that the consumer world and consumer audiences are more global than they ever have been.
And there's just so much money out there. So I want to
Totally.
I want to jump back to the CPG. You kept bringing up Amazon, and in my opinion, most consumer packaged goods companies are going to start dying very quickly. If you look at Amazon's dynamics, so my background, I'm previously was an Amazon seller, built and sold a business, and that's how I got
Oh,
here.
nice.
But what
What category? Out of curiosity?
home and garden,
Which category?
home and garden stuff.
Okay, got it.
But basically what Amazon does is they use their third-party sellers, they pull in all of the data, and they say, oh, great, these are doing really well. Now let's kill these sellers and start our own Amazon Basics version.
Hmm.
So Amazon prioritizes themselves. They have the market. It's growing and expanding very rapidly. I don't see competing with Amazon in a simple type product business, so consumer packaged goods. I don't see that being very successful unless you have a recurring type business model, not a stitch fix, because if you keep getting clothes, eventually you have too many clothes. It's got to be something that's consumable or
Yeah.
something
Well,
that,
but
go ahead.
oh, sorry. Good. Well, I was going to say most CPG is consumable,
Yeah.
right? So it's like cleaning products, personal care products, disposable stuff. Like there is, but I think your point is really well taken, right? Like I have this view that like the you want to be able to develop a
You don't care what type of toilet paper.
yeah. Well, some people do actually, shockingly. But you want a conveyor belt kind of business, right? Like you want to develop a relationship with a customer such that they just expect your box to show up at their door, on a fairly regular basis. And once they expect that, you can start to stuff more things into it if you do a good job building that relationship and marketing products to them. Amazon has the ultimate conveyor belt. I know, I can bet like my left hand that sometime this week we're going to have a Amazon box show up at my house. I couldn't even tell you what it is that we bought, but like it's going to show up. I think that consumers have the tolerance for a few of these in different categories, but it's not endless. So that's why Chewy was such a successful company. In a category that you would think that Amazon would totally like have a huge edge in, but they were able to carve out a really, really interesting business. One of our portfolio companies, Grove Collaborative, is focused on sort of high-end natural and environmentally conscious products, and they've been on an extraordinary growth path as well, with very high recurring purchases. So there's a few of these companies that are doing that. Dollar Shave Club was able to do it, and in each of these cases, you would think that Amazon could have ate their lunch, and they probably would have. But there are a few outliers that do pop up, and once you've developed that relationship with customers, I feel like there's a lot of value there.
It's got to be something where the buying experience is not good, and there's a lot of inefficiency in the market, though, because when you're dealing with products like this, it comes down to, unless it is one of those situations, it comes down to marketing and who can outmarket the other person. And when it comes down to that, you never have big exits, you never have big wins. So Dollar Shave Club was very successful because razors were too expensive, and to be honest, the video was quite a bit of it. Casper was incredibly successful because you don't want to go into a mattress store and get upsold. You want to get a mattress and try it out for 3 months. But in my opinion, as these start to become more established, you see Casper for this, you see Warby Parker for that. In my opinion, it's not going to work for the majority of e-commerce businesses. I think a lot of them are going to have challenges. So like the ones I'm excited about are experiential commerce, like what you were talking about. What are your thoughts on VR?
VR, I think, is a ways away. I think it's a ways away. It was pretty amazing. The experiences are pretty amazing. I think AR is a little bit more interesting. There's some nearer term and broader applications, I would say. I think that what we're seeing right now so far is that like the market for people and people's times to have like a fully immersive experience is like pretty small, and the hardware required is too expensive to build like robust businesses there yet. I think AR will be pretty interesting because you can imagine a bunch of like professional and industrial type applications, consumer applications. AR is also like much squishier, right? Like Snapchat is an AR company, as is like HoloLens, right? And like that's a pretty wide range of types of technologies and levels of immersion. But that's sort of my view of things.
But what are your thoughts? So in my opinion, they'll merge. AR and VR will become the same thing. You'll have goggles that can do either. And once you get to the point where they can do either, then the question becomes AR versus VR, especially as a lot of people are going to start losing their jobs. VR is going to become very attractive, I imagine.
Yeah. You big Ready Player One fan?
I have never played it. I'm actually reading the book right now. It's very interesting, though.
Yeah, it's a great book. it's a little dystopian. Well, it's very dystopian, but
It has to
it's
be,
I mean
otherwise they're
the
never
yeah.
interesting.
That's right. But the foresight that the author had to just like paint this future that is like so believable, it's pretty remarkable, I must say.
It's very interesting in my opinion. So
Yeah.
VR VR is challenging because you need to get the early adoption. And to get the
Hmm.
early adoption, in my opinion, two things will drive VR initially:
Yeah.
porn and prostitution.
Hmm.
So 30% of the traffic on the internet comes from porn. And
Yep.
if you look at industries, and it's weird to talk about, but if you look at industries, they're always on the cutting edge of things. So as you start to get the people that are a little bit weird going into these things,
Hmm.
that will bring down the prices and start building the system. And then on it's funny, but then on the prostitution side, you need a business model. So you need a way where people in virtual reality can have services and be charging people and have credit-based systems built in. In my opinion, it'll get built on a black market, and then that'll start to get settled out because you don't really have rules and regulations in VR. So who sets the rules and
Hmm.
regulations? It's the bookkeepers. So that's how other businesses and other service providers will start to get applications and start to get access on VR where they can actually build a business.
Hmm.
That's my kind of bold and a little out there prediction.
Yeah, that's I certainly am not looking there, but uh, I think your observation is totally correct, which is that that industry, unfortunately, is where a lot of the sort of pull ends up being with a new platform shift, right? Like that was, when Akamai made the internet faster, like who needed the internet to be fast first, which is why I feel like it's so hard to be like completely black and white in this world because like you take the good with the bad. Uh, so yeah, it'll be interesting. That's interesting. That's an interesting point of view, especially around sort of the business model, the lack of the business model, and the need for incentives to appear.
I was listening to a podcast with Stephen Pressfield actually, and he's an incredibly successful author.
Hmm.
The first 30 years of his writing career just god awful, book after book after book. Nothing got published. And he said the most important thing he learned was actually he got hired to be a director and a screenwriter on a porn show. And the director said one thing to him that changed the way he looked at writing. It was even when there's a sex scene, the show has to go on. So the story has to keep moving forward. So even in an action scene, there has to be something that promotes the story. Even in a boring whatever scene, there has to be something driving the story. And it was very interesting where you look at controversial things like that, but at the same time, you have a lot of the same triggers that apply. I mean, he's one of the
They're universal learnings.
yeah, he's one of the better business and he wrote business writers, and he wrote The Legend of Bagger Vance. He wrote some incredible things, and this is where he learned. Yeah,
Would you was that like on an interview somewhere? I'd love to if you
I
wouldn't mind
think
sending it to me. I'd love to
it
see
was
it.
James Altucher. Yeah, I'll check it out and I'll try to send
Okay.
you a link. But it was quite interesting. I want to jump to the lightning round now. How's that sound, Rob?
Sure. Yeah, that sounds great.
My first question for you. First deal
How
you
much
did.
time do I have in the lightning round?
Uh, you can take your time.
Just
Don't worry.
fast.
You might get struck down by Zeus.
Yeah.
Yeah. First deal you did.
Um, First deal I did was a company called Signpost in New York. It was at the time a ad network connecting consumers to local offers from businesses.
How'd it go?
It's still operational. It has shifted to being a marketing software business for small businesses. They've raised a bunch of money from Spark, Google Ventures, Georgian partners, and so forth. So they're doing great. I actually haven't seen the CEO in a while, but I think I'm supposed to see him in a couple weeks.
Oh, nice. What? Speaking of which, what are you excited about today? What keeps you pumped up?
Um, I am currently, well, I think we talked about some of these things. So, oh, well, I guess what I would say is a lot of people are looking for the next big thing. I still think there's so much room to run in terms of the types of products and experiences that consumers are dealing with every day that they've just taken for granted. So we've talked about some of these like buying home products, experiential categories, that sort of thing. Like I continue to be psyched about that. I love businesses that affect the lives of like everyday people in, not the hippest parts of the country. And I'm excited that like more and more VCs are trying to find like more and more esoteric things and leaving that as open sort of greenfield for us.
You mean we should help people other than San Francisco?
That'd be
Two biggest wins to date.
Uh, we invested in a company called Sunrise, which was a mobile calendar company that was bought by Microsoft. Extraordinary business, or extraordinary company, extraordinary founders, great design, sold too soon. The other is a company called Tap Commerce, which was a mobile retargeting business that was acquired by Twitter. Also extraordinary founders, also sold too soon, in my opinion. But we're going to hopefully have another crack at working with these great founders again.
Absolutely. We always like to go flip side, so anti-portfolio. Who's the big ones you missed?
Oh gosh, there's so many. So one I mentioned already is Stitch Fix. So I wouldn't say that we would have. So I always like to clarify, and this is something I picked up from an interview with Bill Gurley, where he said, we didn't have the opportunity. How do you say? Chose not to pursue it. That doesn't mean that we would have gotten it, but we chose not to pursue Stitch Fix. Had a meeting with Katrina in Boston as she was moving to the West Coast. She already had a term sheet from Steve Anderson at Baseline. There was room in the round, and I just did not get it. Like, just did not get it. And that was clearly a mistake.
It happens. It happens. As long as you get those at bats. Give me a bold contrarian prediction.
It used to be more contrarian, but maybe not. I think that I think that we are like all going to be cyborgs in the next 20 years.
Okay. What's your definition of a cyborg? How hardcore do we have to be?
I think you need a piece of machinery embedded into your body somehow.
Any prediction
so the fact
on the
that
first one?
For me, it'll probably be a health-oriented device. But I think for a kid, like the more it's elective versus like trying to keep you alive or keep you more healthy, the more interesting it's going to be. I think it'll be. I mean, I'm hoping for some sort of a machine-brain interface. That'll probably be a more than 10, 20 years from now. But I think that some version of that's definitely coming.
Yeah, it makes sense. You can just start embedding the Fitbit into your arm, or you have the payable cryptocurrency scanner right in your hand. A lot of things
that's
are coming
right.
quickly. We'll see when we get them.
I'm sad that Black Mirror now, it's like every other episode, spoiler alert, every other episode has something like that now. So it's like not all that interesting, but I've been saying this has been my stock answer for a while, so I'm sticking with it.
I haven't checked it out. I've heard it's very creepily accurate in terms of what the future looks like.
It's very good. It's very thought provoking. Well, but my public service announcement is do not watch the first episode first.
Yeah, I heard it's horrible. It's funny. I just heard that today. I heard it's horrible.
Yes.
What blogs, podcasts, etc. What are you reading, staying informed on a daily, weekly basis?
Recently, actually, I have not been listening to that many podcasts. I love my Pocket app. And so what I end up doing is downloading or is saving a bunch of pieces of content from my Medium and Twitter stream and sort of saving it for later and having the text-to-speech functionality help me out. And I just listen to that. Your podcast, of course, 20-Minute VC, Andreessen Horowitz's great stuff, Kara Swisher's interviews I really enjoy.
She's so mean.
I don't know.
She's great. She's great. I like her.
I'm on a kick around like astrophysics right now. So I'm like a middle school kid. I'm just like devouring all this like Neil Tyson deGrasse stuff, which is really fun. I always wish that I'd studied more physics when I was in high school and college. So now's my chance, I suppose.
Yeah, I was gonna say, you still can, right?
Yeah, that's right.
What's overhyped besides ICOs? Voice computing.
Okay. I think it turns out voice computing kind of sucks. The AI is not really there to support horizontal applications of it. speaking to a computer is actually like humanity has been waging a war against voice since the dawn of time, since we figured out how to do cave paintings. We realized that it's a lot easier to communicate through written or visual representations versus what comes out of our mouths. And so I think voice is way overhyped.
It's also a little easier to lie with pictures, but neither here nor there. Give me one productivity hack, and then we're good.
This is my latest. Very easy. Try to sleep 8 hours a day.
I like it.
Don't look at a screen 45 minutes before bed.
What about a Kindle if it's not lighted?
Kindle's fine.
Okay, Kindle is the way to go.
My latest. I've been having a lot of sleep issues, and so I'm actually like, I did a sleep test. I've had like some issues around it, and so like this, and so I've done a experiment recently around just this. Like, I'm trying to be religious about trying to get to bed relatively early. No devices. I yell at my wife for having her device in bed all the time. I try to get her to turn off the backlight. I sleep in a very dark room, and it's made me feel a lot better. You just get a lot more out of the time that you do have while you're awake. So that's been great so far.
Sleep is one of those things too many people take for granted and just push off. Rob,
yeah,
where is the best place for people to reach out to you and thank you? I know you're a busy man. I want to thank you for coming on, and I want to wrap this up so you can get back to playing Donkey Kong and saving the world.
Yeah, well, thank you very much. I really enjoyed it. You can follow me I'm at Rob Go on both Twitter and Medium, and so that's the best place to follow me.
That's quite a convenient name.
It is.
There's no other Rob Goes, and it's so short you can't forget.
Yeah. Well, there are others out there, but I'm usually the first to get to the handles, or the URLs.
Matt Ward, a little bit tougher. Guys, give him a follow, say hey, and thanks to Rob, and thanks for tuning in, guys. If this has been fun, helpful, interesting, something exciting or actionable, the Syndicate.vc, make sure you subscribe. You can leave us a review on iTunes, and you can do all the good stuff. You know what to do. Until next time, cheers, and thanks, Rob.
Thank you very much.
Awesome. Peace.
Cool. Thanks so much.